Good day, subscribers. Thank you so much for joining me today. I am Jeremy. This is the Financial Education Channel, and today we are talking about, are you diversified? Is your stock market portfolio diversified? I'm going to share with you guys 5 different portfolios that I believe are all diversified. Now, the first 2 are going to be bigger type portfolios, so meaning bigger type stocks, bigger market caps, safer type portfolios maybe. And by the way, all these stocks I'm kind of mentioning, other than my portfolio, which we'll mention at the end, are not like me blessing that stock as like, that's a great stock to invest in. I'm just trying to give you examples of diversified portfolios. Then we'll go over a portfolio that's a dividend-heavy portfolio, so a type of diversified portfolio that you can make a lot of money from dividends from. We'll go over one that's a super growth one, a very aggressive portfolio, and I'm talking really aggressive portfolio. And the last one we're going to talk about is my portfolio. My wife and I, are we diversified? I'm going to share our 5 biggest stocks, and you're going to say, am I diversified, or do I need to get more diversified, guys? So we're going to talk about all this today. I hope you enjoy. And by the way, all these portfolios have 5 stocks. Why 5 stocks? Because I believe it's honestly the perfect amount of diversification. I believe if you have any more than 10 stocks, it's too much, because then you start not believing in stock number 17 or stock number 12 as stock number 3. It's too much at that point. And I try to, always have at least 4 stocks, because anything less than that, and you might be going a little too heavy, and that's something I've done a few times in the past. Usually I try to hold more than 4 stocks total, but a few times I have gone down that route, and sometimes it's worked out, sometimes it hasn't, because what happens is if you have one stock that does really bad, and say you only own 3 stocks, 2 stocks, 1 stock, that one stock goes really bad, your whole portfolio is going to go really bad, guys. So 5 stocks is my perfect amount, in my opinion, as long as they're all in different sectors, and that's what we're talking about. So the first portfolio we'll go over is a portfolio that would contain Apple, contain Union Pacific, contain Facebook, contain Procter & Gamble, and contain McDonald's. Those would be the 5 stocks. So what do we have here? We have Apple, which is a consumer electronics company. They're kind of like the Johnson & Johnson of smartphones. You know what I mean, at the end of the day. We have Union Pacific, which is a train company. They're involved with moving all the goods all over the United States. We have Facebook, which is a growth beast, which is social networking, Instagram, Facebook, some of those platforms. That's what Facebook is. We have Procter & Gamble, which is consumer goods company. I mean, you can look around at some of your soaps and some of your toothpaste you use, and a lot of different laundry detergent and stuff like that. You're going to look at the back of the bottle, you're going to see a lot of them are Procter & Gamble products. So that's what the business they're in. And the last one's McDonald's, which is fast food burgers and some other products they sell, but that's the name of the game. And you see that they're all different sectors, right? We have one consumer electronics, one that's a train company, one that's social networking, one that's consumer goods around your house, and one that's fast food. Completely diversified. If one of the industries struggle, the other ones hopefully will be doing good, unless just the entire world's in a shambles. And then McDonald's would probably do great at that time, because everybody would only be able to afford 39-cent cheeseburgers. So that's the first portfolio there. This next portfolio, let's look at this one. Google, Colgate-Palmolive, Coca-Cola, ExxonMobil, Walmart. Google, obviously, the biggest search engine in the world. And I don't know what you would consider YouTube, which Google owns. I would consider it one of the biggest entertainment platforms, if not the biggest entertainment platform in the world. And then also, they do have other products like the cloud. Cloud is becoming big for them. So they're kind of a diversified business now getting into. You have Colgate-Palmolive, which owns Colgate toothpaste, which owns Palmolive soap, 2 of the biggest brands out there. They own other products other than that, but those are the 2 main ones. You have Coca-Cola, which is obviously the biggest drink company in the world. ExxonMobil, one of the biggest oil and natural gas companies in the world. And then you have Walmart that right now is the biggest retailer in the world. So that would definitely be a diversified portfolio right there. Now, this next one is what I call a diversified portfolio, but dividend heavy. All 5 of these stocks all pay dividends, and some of them pay really high dividends, but it's still diversified. So number 1, Verizon Wireless, a communications company. Some of you have them for your cell phone service probably. They pay big dividends, and that's their business. Chevron is an oil and gas company, one of the biggest in the world. They pay nice dividends. Microsoft is, a computer type company. And now they're getting into the cloud big time. They pay nice dividends. Ford is one of the biggest automakers in the entire world at the moment. They pay a very high dividend. Then you have JP Morgan as the last stock there, which is, in my opinion, probably the best run commercial bank out there, and they pay a nice dividend. So all 5 of those stocks all pay dividends, and you're diversified because you're in the banking sector, you're in auto sector, you're in computer sector, you're in oil and gas sector, and then last year in telecommunications sector, guys. So this next portfolio is diversified, but this one I call a growth living on the edge type portfolio. Like, this is ultra aggressive. I wouldn't necessarily suggest anyone to own this portfolio, but this is one of those you can make a lot of money and you could possibly lose a lot of money in this one. So stock number 1 would be Snapchat. Snapchat, some people consider it a social networking type platform. Some people consider it a camera company. I don't know. I consider it more of a social network than other things, or just a communications type app. That would be stock number 1. Stock number 2 would be Monster Energy, which is one of the biggest energy drink. Well, it's actually the second biggest energy drink maker in the world. They might be number 1 someday now that they have the Coca-Cola distribution. You have iRobot, which is a company that I have their vacuum cleaner that is called the Roomba that goes all around your house. They make other type of robots other than that, but their main business is making robots that basically clean your house for you. Then you have Amazon, the retail giant, the growth beast right now. And lastly, you have Tesla, which seems like they're going to win the auto industry 10 years from now, 5 years from now, 10 years from now, 20 years from now, guys. So that would be our growth living on the edge of life type portfolio, because you got, Snapchat, which is unprofitable right now, which is a total different sector than Monster Beverage, which is an energy drink company. They are profitable. They trade at a pretty high PE for a drink company. iRobot trades at a very high PE, especially for something that just rolls around your house and cleans it for you. You have Amazon, super high PE. They're in retail. And lastly, you have Tesla, which is an automaker, and they're very unprofitable right now. So that's our growth living on the edge type portfolio there. And the last one, we got to talk about my wife and not my portfolio, our 5 biggest stocks. Are we diversified? So number 1 stock is GoPro. Number 2 stock is Wynn Resorts. Number 3 stock is Google. Number 4 stock is Starbucks. And the last stock is Snapchat. So are we diversified? Well, with GoPro, we obviously have a consumer electronics type company. They sell action cameras, they sell drones, they sell some related products and accessories that go to those products. We own Wynn Resorts. The number 2 stock, like I said, that is a casino play. That is a huge resort company here in Vegas, also out in Macau. That's the name of their game. Google, we already talked about that a minute ago. They own the search engine. They own one of the biggest entertainment type platforms in the world. They own the cloud and some of those services. Starbucks, obviously, possibly 5 years from now, maybe even less than that, they might be the biggest fast food related company in the entire world. That's Starbucks. And last one, Snapchat, we just talked about that one a minute ago. Kind of a social networking / camera type company, but they don't really sell cameras, they sell the spectacles. But let's be honest, that's going to be like nothing to their business. So they're an advertising type platform at the end of the day. So you would look at that and you could say, I would say I'm definitely diversified. GoPro and Snapchat, do they have a little overlap there? Maybe, possibly, because of Snapchat's kind of considering itself a camera company, and GoPro's obviously a camera company, but let's be honest, Snapchat, when you open the app, it opens to a camera, but that doesn't mean they're selling cameras. Like, there's a totally different ballgame there. And then you say Google. Is Google somewhat similar to Snapchat? Not really, other than they just both need advertising, right, to support their platforms. Like, Google makes the majority of their money off of advertising. Snapchat now, they're making pretty much all their money off of advertising. So they're related in that way. They're just totally different ways on how they go about making money from advertising. Wynn Resorts is totally different than Starbucks and some of those kinds of things, guys. So I would say my portfolio is diversified. Let me know what you guys think. Is my portfolio diversified? Is your portfolio diversified? Because that's the main question you got to ask yourself. Are you in too few stocks, too many stocks? Are you in too many stocks that are in the same sector? Because like I said, guys, if that sector gets nailed, your entire portfolio is going to get nailed. And one last thing to kind of cap off the whole diversification, it's not just kind of important to have, diversified stocks, but it's also nice to have a little balance of a steady company and a growth company there, guys. And that's kind of where my portfolio balances, right? GoPro, they have nice growth. They grew 23%, 19% these past 2 quarters. Wynn Resorts is huge growth right now, but they also have a steady business, right? Google has nice growth, but they also have a very steady business. Starbucks has decent growth, not stellar growth, but they have a very steady business. And Snapchat has ridiculous growth, but their business isn't steady, because it's just kind of coming online. So we got to see how that transforms over the next couple of years. So hope you guys enjoy this today. Is your portfolio diversified? If you just came across this channel, you may want to subscribe. We talk personal finance. We talk entrepreneurship. I'm an actual business owner. I give away so many business tips. We talk the stock market the most of anything, just like we did today. Thank you for watching, guys, and have a great day.